COVID-19 was very much a supply-side negative shock in the economy, with demand-side effects too, especially after the application of lockdown rules. By February 2020, just before the outbreak of the pandemic, money supply was growing at a steady rate and there was no inflation at that time. And then something happened. This is actually what we're going to study next. We'll apply the same analysis based on the quantitative theory of money to explain why the expansion in central banks' balance sheets have been inflationary in the aftermath of COVID-19 pandemic. Here you have an example taken from the Federal Reserve, the US central bank. Here you have the monetary base, which is, as you know, a proxy of the size of the balance sheet of the central bank, before and after the global financial crisis, indeed covering the two main crises in the last 20 years, the global financial crisis and COVID-19 pandemic. Well, as you can tell, the balance sheet, the monetary base started to increase in the autumn of 2008 quite significantly, and it has continued to increase after that. And you can tell a huge spike in the series in 2020, in February, March, April 2020, a much more significant increase to much greater levels during COVID-19 pandemic years, not only in 2020, but in the aftermath of the crisis as well. So there was indeed a surge in narrow monetary growth. This is something that is common to these two crises, to the global financial crisis and to COVID-19 pandemic. What we're going to study next is whether this was accompanied by an increase in the amount of money or not. The difference with the global financial crisis is that this time, during COVID-19 pandemic years, both the monetary base and a broader definition of money, M3 in the US, for example, also expanded quite dramatically. So, as compared to what happened during the global financial crisis years, in which, as you can tell here, just checking the annual rate of growth of money, M3, that's the red line in the US, in 2009 and 10, you all know now that the amount of money decelerated and actually contracted, -4% in those years, despite the surge in the monetary base. The actual amount of money, M3, contracted. Whereas during the COVID-19 pandemic years, the amount of money increased quite notably, up to 25%. This is a very important distinction between the response given to the crisis in 2020 and that given to the global financial crisis in 2008 and 9. With COVID-19, there was a different monetary policy response, truly an expansionary monetary policy this time. QE, indeed, was started again by the central bank with banks and non-banks, the application of the zero interest rate policy as well, but also, and this is different this time in 2020 as compared to 2008 and 9, central bank or bank regulators decreased the bank capital standards. That's a very important distinction between the two, because that helped banks create more money. So what was the outcome of these truly expansionary policies? Well, the outcome was the creation of a lot of money in the economy, a surge in the amount of money broadly defined, 25% rate of growth in the amount of money in 1 year in the US. This is the highest rate of growth in peacetime since the end of the Second World War. However, major central banks blame exogenous factors for the inflationary episode that came after COVID-19 episode in 2022 and 2023. This is also because of the models used by central banks to assess the economy. We'll study these models in detail later in the course. Meanwhile, it's worth taking a look at the data in these two diagrams. The one on the left is on inflation in leading economies, and the one on the right is on broad money growth on M3 or the equivalent monetary aggregate in leading economies. The important thing about broad monetary growth here is that when including a measure of money that takes into account not just cash in circulation, but also bank deposits. So what happened to the amount of money, broad money, in these 5 economies? That's something you can see here on the right-hand side of the diagram. Well, there was a significant increase in the amount of money in the US, 25% increase. That's the dark blue line. Followed by the UK, that's the red line, with a 15% rate of inflation in 1 year, and then followed by the Eurozone by a 12% rate of growth of money. What about the other two economies, Japan and Switzerland? Did they increase the amount of money as much? Well, they didn't. There was an increase in the amount of money, but not nearly as much as that in the other three economies. And what happened to inflation in these five economies? Well, that's something you can observe in the left-hand side of the slide. Well, inflation was significantly much higher in those countries where the amount of money expanded the most. So the US, the Eurozone, and the UK. And inflation did increase in Japan and Switzerland, but again, only up to 4% in these economies. So again, there is a correlation between what happens to the amount of money and what happens to prices, even though there is a delayed relation between the two. The mistakes made by major central banks reveal a misconception on what inflation actually is. Quite frequently, it's said that inflation is due to changes in energy prices or food prices, for example. Well, inflation doesn't result from just a change in sectoral prices, but in the price level. This is a very important point. Prices change all the time relative to other prices. For example, technological goods and services prices usually fall, which may be compensated by an increase in other sectoral prices, keeping the price level steady. Also, central banks tend to disregard the effects of excessive monetary growth on inflation. And central banks also usually refer to many factors affecting inflation without a coherent theory to explain inflation more consistently. This is what the British economist Charles Goodhart has referred to as the bits and pieces theory of inflation.